CBA profits are down 10%. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from news.com.au. CBA post profits slid due to ongoing risks associated with the pandemic, so their profits are down. And this article is written by Gerard Coburn from news.com.au. The country's largest bank has revealed the pandemic has dented its financial performance in the past 6 months. Now, I can't imagine anyone is at all surprised. But, well, guys, they're still making a profit. They're still making a profit. I mean, if you look at the stock market here in Australia and you look at the top 10 companies with the market cap, top 10 in the highest market cap in Australia, there's too many banks. Too many banks. And you compare it to other countries like the US, where it's all these technology companies, all these things that innovate. Banks aren't really innovative. They're not really that innovative. Come on, really. I mean, an offset account, that's just the old money's clause anyway. What innovation can you say from a bank? They're playing catch up with all of these new financial sectors, with all of the interest-free products. They got usurped by Afterpay. Afterpay's created a whole new way of buying stuff. The banks have been left behind. They don't need to innovate, guys. It's all stacked in their favour. Commonwealth Bank says it is committed to Australia's economic recovery despite super low interest rates battering the institution's bottom line. Releasing its interim results for the first half of the 2021 financial year, CBA posted a $3.89 billion cash profit, a 10.8% decline on the same period last year. But they're still profitable. You know, we'll look at how the market has responded to that and some of the recommendations there, but they're still profitable. They're not, haven't burnt a hole yet. Remember, CBA have promised to not, foreclose on anyone's houses until, September this year, long past the moratorium or the mortgage holidays, long past that's expired. I imagine it's because they want to protect the value of their assets, which are the houses. The banks do not want to see a real estate crash. They want to quietly tap someone on the shoulder going, mate, you're in trouble, you need to sell. Or they'll, if you can scrape by and keep going, they'll just ignore it. They'll just let you keep going as far as you can. They won't care. But if you're at real risk, they'll let you know. Because you've got really 4 markets here. You've got the owner-occupiers in apartments. You've got owner-occupiers in houses. They're all going to do as much as they can to hold on to their property if it's their primary residence. They'll do anything they can to keep it. You don't want to lose your house here in Australia. There's a stigma associated with not owning a house or with renting. I mean, for a country where everyone wants to be a bloody landlord and make their millions and reach, make all their money in property, you'd think there'd be more of an understanding that it's completely acceptable to rent. But, it's just the way our culture is, guys. It's Australia. It's changing. Really is. It's kind of sad in a way. Then you've got the investors in apartments and investors in housing. Now, the investors, they're going to be more likely to cut their losses, and they're going to be more likely to be, pressured into selling. So it'll be interesting. We're starting to see in apartments that they're falling back. Some of the Sydney apartments are down back to 2016 prices. Rents are even getting worse. So it's interesting times in property. But here we go. CommBank, our biggest bank, still making a profit. First recession in 28 years. The bank noted increased provisions because of COVID-19 and significantly lower interest rate settings have impacted the nation's largest mortgage lender. Operating income for the period was down 0.5% to $11.96 billion, partly because of a pressured net interest margin during the economic downturn. CBA Chief Executive Matt Comyn said the outlook remained positive. However, further health and economic risks associated with the pandemic could impact operating conditions. We are prepared for a range of scenarios and have taken a careful approach to provisioning, he said. I mean, there's no political will to allow a market correction to occur in property in Australia. The government is going to intervene because there's too much riding on it now. Australia isn't the nation built on the sheep's back. Australia is the nation built on the spec house back, with imported probably more likely imported New Zealand pine or maybe some local Australian pine. Definitely imported Chinese wiring and flammable cladding, of course. We also continue to monitor our lending portfolios closely for any signs of stress. With the low interest rate environment will continue to put pressure on our revenue, which is why we remain focused on performance, operational execution, and capital allocation. And you've got to understand, guys, banks, they're not our friends. They're just risk management businesses. They're masters at managing and mitigating risk. Total loan impairment provisions increased to $233 million over the first half of financial year 2021 to $6.8 billion as a result of ongoing virus risks. Despite the slump, CBA shareholders received a 53% jump in their interim dividend to $1.50 per share, fully franked. Dividends during 2020 were limited due to guidance set by APRA, which said banks must retain at least 50% of capital for financial safety during the virus crisis. The low interest rate environment has also impacted the bank's net interest margin by 10 basis points compared with the first half of the last financial year. It now sits at 2.01%. The bank said net interest income was broadly flat over the period, despite increases in both housing and business lending. CBA said further headwinds on the net interest margin would occur during the remainder of the year. The bank's Common Equity Tier 1 CET1 ratio improved 100 basis points on the second half of the last financial year to 12.6% due to strong organic capital generation and benefits from divestment, including the sale of its insurance business. CET1 is a financial metric to show how well capitalized a bank is. The ratio has to be above APRA's unquestionably strong benchmark of 10.5%. The bank also noted deposit volumes continue to grow while operating expenses over the period rose 2.3%. And if we jump over to TradingView, let's have a look at CBA. Right now, Commonwealth Bank is sitting at $86.71 71 Australian. I've been looking at too many US shares, guys. Down 67 cents or down 65 cents. And you can see here, well, it's at levels almost where it reached at the beginning of the year, where it was just over 90 bucks. Everyone, so it's clawed right back there. The technicals are saying buy. And let's have a look at some of the ideas. Look, you've got a few people here that are generating authors. Now, the banks here in Australia, they're a favorite for dividend income. I mean, you know, $1.50 on 86 bucks. Yeah, I mean, let's have a look at CBA share price. What's their dividend yield? 3.43%. And it's fully franked, so there are some tax advantages to that. So here we go. What do we have here? Buy at gap. Commonwealth Bank of Australia. Long. CBA to test all-time high. Well, there you go. First recession, 28 years, CBA to test the all-time high. What do you think? Do you reckon it can reach it? So, currently at weekly resistance, month looks very strong. Anticipated breakout of a falling wedge. An attempt to print new 92 plus. Wouldn't enter personally due to risk, reward ratio, but can't fault the strength. There you go, guys. Did anyone get in at 60 bucks or under $60 for CBA? You'd be happy now. So, guys, there we have it. CBA's profits down 10%, still paying a fully franked dividend, still making a profit. And the first recession in 28 years. What do you reckon? As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I cobbled together here, there are a few ways you can support us. You can join us on YouTube or Patreon. Support us using affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. You can also join SelfWealth, and we'll each get 5 free share trades. Take care, guys. Have a great day, and I will see you in the next episode. Bye for now.